Hello and welcome to weekly market analysis for the equity markets. This is Brandon Waddell, Charter Market Technician for the week of March 27th. So we're going to start off looking at the ES here. And I'm on the monthly chart. And the reason why I went out this big is I had talked previously in other videos about the 13-month moving average. And as you can see, typically when you get a close below that 13-week moving average, prices end up making a lower low. Well, we were looking at the month of March and thinking we were probably going to close below that. And obviously things have turned around and moved much, much more bullish. So it looks as though the bulls have kind of held off, and that little bit of a pullback that we experienced may be all we get before we end up actually making some newer highs. So that's just something to keep in mind on the big picture there. We are not really seeing that weakness we had originally started this year, and things might start to turn around for a little bit. So dropping down to the weekly time frame, I'm staying on the continuous contract here. We do have a weekly supply that we will be retesting very soon if we continue on this trajectory. Now, we did start off this move upwards from below 40, which typically when you make a move below 40, you do not make new highs. So the previous highs that we have here on the weekly charts, we're likely to get a correction before we actually test that. And that would be about 45.86, I believe. Let me just make sure. Yep, 45.86. So we are not likely to make that new high without some sort of a big pullback here, maybe towards that 4,400 level. We'll have to wait and see. Basically, what I could do is throw in the Fibonacci's, but we haven't put in the top yet, so I'm not sure where this would actually need to be placed until we actually put in the top and we see where it's going to pull back to. But keep that in mind as well. And, you look back, and the last time we've been below 40 was on the pullback during COVID on 2020. So we've been extremely bullish for quite some time and then had that little pullback. The real key thing, too, will also be if we can get back above 60 on the RSI, because that'll show that there's no more of a bearish trend. If this is going to be a long-term bearish trend, we will fail to breach that high, maybe use the low of that zone again or even below it and turn down and never get the RSI above 60. So if that happens where we start pulling back, obviously it's a long-term thing, but if we end up breaking below this low at 41.30 basically, then we're in for a long move down and maybe many more months throughout the summer into the third quarter of a bear market. So we're at that crossroads, kind of waiting to see what happens at this point. I'm going to go to the specific contract now. Oops, not H, it's M. There we are. And I'm going to drop down to the daily time frame to continue our analysis. And looking at our daily chart, we're still seeing bullish pressure. We did actually make a higher high both on momentum and price at the same time, which is telling us we're likely to move higher. However, we are rushing right up into this little bit of supply right here at 4,600. So obviously the whole number plus the supply being there and the origin of that selling pressure could give us that push back down that we were expecting. That I don't think is going to be achievable because, again, remember, we're not likely to go above the previous high of 45.78. I think that's what that was on the weekly, right? Yeah, there it was, 45.78. A little bit different on the specific contract than it was on the continuous, but still the same area. So we're probably not even going to hit the 4,600 before we see that weakness coming in. Momentum should probably be a little higher for us to continue, but it's still looking good, but we may stall out. We stumbled last week, started off with Monday red, then green, then red, then green, and finally Friday broke to the upside rather than down, which is typical. When you go consolidating sideways, you usually continue the same trend you were already in. So the reversal is going to be more of a sharp turn, kind of like what you see here, where you have one green, then red, and go right down. Green, 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 red, start going down. So expect to see some weakness possible coming up, but I'm not seeing the supply zone yet that would actually turn us around. And if we go down, let's see, for demand, now, I suppose that's it. That would be our first pullback area. Kind of drop base rally or rally base rally, depending on the heights of these candles here. Close is 66.75. The high is just one tick above. So that's rally, base, rally right there. But your target would be 42.70 on the pullback, or as I was saying before, once we figure out what the high is, we can throw in Fibonacci's to kind of measure the pullback. Dropping down to the 4-hour time frame, seeing a lot of stair stepping on the way up. That's not the weakest, it's not the strongest move that I've seen. And as we look back, we'll go ahead and put in a line right here to see if there's any overhead supply that we're going to be running into that might telegraph where the turn could possibly be. And we do have a zone here. Right near the previous highs, we basically did a rally-based drop. And it's not the best looking zone because we probed around a little bit before we dropped cleanly out of the area, but that is the origin of selling pressure. So keep an eye on that 4560 area as we come up to that. And what's troublesome is we're making a new high in price. You can see, obviously, but we're failing to make a new high in momentum. And you've probably heard me say this before, it sounds like a broken record, but that is a negative divergence, and that usually leads to a pullback in price. We saw it not too long ago on the previous peaks. Right there. And again, didn't make a new high when that happened, so we had a big pullback. Now, notice it doesn't necessarily mean reversal of the trend, it means a pullback, so we're going to keep an eye out for that. And we actually do have an area of demand right here at 44.81, 44.56 as our first pullback target if we start falling around that from that 45.60 area. Kind of curious to see if that also gives us any kind of Fibonacci retracement measurement. If we go from where we are currently, it's just above 23.6, but if we were to actually hit the supply zone, you can see that 23.6 retracement's right inside that zone. The next level down is just around the 38.2 retracement, just kind of in between, actually, these two. Rally-based rally down there. This has already been used, so if we don't hold the 44.81, expect a pullback to 43.89. And then if that doesn't hold, there's really not much below, although there is kind of a zone-on-zone right here, so that's likely to be the strongest area because you do have rally-based rally running into the rally-based rally there. So I'd expect that to hold. Dropping down to the 60-minute time frame. Let's see if we can fine-tune anything here as far as entries and turning points in the markets. Go ahead and remove that. And the zone looks a little different here. Tighten it down just a little bit. You have 6 basing candles before the rally. We also have another zone just barely above that, although that's been tagged once. That's where we turned around on the 25th and started moving up very, very sharply. So as far as where our overhead target would be, let me go ahead and see if we've got something there. And pull this back. There we go. And zoom back in. So the whole thing really is drop, base, 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 drop. So the zone definitely does change quite a bit, and I think we're almost up to that right now. Let's take a look. And I'm going to take a look back a little bit further, see if we can get above those highs, which again I see is pretty unlikely without some sort of a pullback first. That's what the chart is telling me at least. But then we run into that overhead daily. And yeah, there's something right in here. Let me go ahead and clean this up. Because we're looking at that smaller time frame. There you go. I'll just use the whole area there. So going back to where we are, as you can see, we are pushing into that zone right now where we could see some weakness coming in. Notice the momentum has been dying off. Even though prices are moving higher, we're doing it on less and less and less momentum. That's not a good sign. And that's not sustainable either. I'm going to get rid of the Fibonacci here as well for a moment. And you can see that that's what caused us to pull back initially, and we're taking another run for it with less momentum. There's no way that's sustainable. So we may end up on Sunday or Monday starting to see some weakness coming in. Not sure exactly when it'll kick in, but it does look like it will. And we'll pull back to those demand zones, as you can see. Got the 2 zones right here. I was just talking about 44.93. Not a huge pullback expected before we try to make another run at the all-time highs. Well, at least the other previous highs first. Let's not get too much ahead of ourselves. We got a little ways to go to all-time highs, but this has already been tagged a little bit. So as far as fresh zones go, we've got, like I said, that thick area to get through there. If we're lucky, we get up to 46.20, but I think we're going to pull back first before we go up there. So that's what I'm seeing so far on the ES. And if we go into, let's say, the Nasdaq, I'll do a continuous contract first, go out to the weekly chart. And let's take a look to see what is going on. Remove some of my notes there. Pretty much the same picture. We had a negative divergence leading to this pullback that we're currently existing in. And the last time we were below 40 was back in 2020. So pretty much the same picture going on here. As you can see, we do have a weekly supply that we didn't actually reach on our last move up, did we? Oh yeah, we did. So we're still shy of that, and we're probably not going to be able to take out that high once again without some sort of a pullback first, and that's at 15,260. So go down to the daily and to the contract specific, and again, let's start with fresh charts. So looking left and up for our first fresh supply zone, here we got the drop-based drop right there at 15,234, but you can see we're getting weakness again. We've got mixed colors, red, green, red, and that is a little bit of indecision, even though we had a little bit of a bottom tail with some buying pressure. Overall, we couldn't get above 60 either. That's very weak. The fact that we couldn't get above 60 as we're pushing higher shows there's weakness in price. We don't have a zone here, but that doesn't mean that price can't turn around anyway, being pulled down by its own weakness in other markets as well. So dropping to the 4-hour chart, let's see if we got anything there as we look a little closer. First, I'll look back at demand to see if we might fall down where we go. First, we got drop base and then rally. Not the best zone. You can see we only went one time the height of the zone, so that's not very powerful. I would say this is really the strong area of demand. I'd expect more out of that, honestly. Because you see the size of the zone compared to the movement up. This was just too wide compared to the weak movement up. I don't see that being a viable zone that should be able to hold price. So the Nasdaq's showing a lot more signs of weakness than we saw on the ES. Keep that in mind. And let's zoom back a little bit, see where our tops might be. We do have the previous highs. And honestly, this is a zone right here that was tested pretty deep. It went about halfway. So we're just below that right now. There's not much else here unless this has created a new zone on its own, which is, it's kind of wide again compared to the move down. You can see we had a drop, base, drop, and then pause, and then dropped again. So we're actually above this, I believe. Let me just check. That's the lower zone. And yeah, we're actually in that right now, trying to move up into the upper area, as you can see, into that upper zone. So we're testing an upper zone, but again, that zone has already been tested once before. So we go a little deeper into it. We have really lost a lot of momentum here, as you can see. But we're still in bullish territory, and usually when you fall from above 60, you don't go and make new lows. So we might just, we did actually fall a little bit already. We'll have to see. There's definitely some weakness here. So this is suggesting either some sideways movement or possible pullback to about the 14,070. If this happens to be the high that we are currently experiencing from the beginning of our impulse up, we can go ahead and put in the retracement values. And you can see 23.6 would be pretty viable. That gets us to that weakened area of demand that I took off the chart. It was this. Drop base, and actually that's part of the rally there too. But, with the Fibonacci backing up, maybe that's where we're going to for the first part of the week. And then after that, we bounce and try to retest highs again before falling back to the 14,070, or we fall directly to the 14,070 fresh demand first. Going down to the 60-minute chart. See if we can fine tune anything. As we're moving up, I'm going to clean this up. I'll remove this as well. You can see there's a zone that formed for itself right here on Friday. Rally, base, drop. And as we're coming up, you can see we are very, very weak. We can't seem to get above 60. If we do rally very quickly, we might be able to push right up against 60. But if we're staying below it, then that 14,798 is where we're going to turn around and head down. The first target on a downward move, I would say, is this demand right here. We've got drop base rally, 14,556, 14,433, and there's a small zone right before that, although actually I should probably include the whole thing. There we go. Rally, base, rally as well. So I don't see us being able to push through that very easily without bouncing first. Might be a little bit more sideways than downward on the Nasdaq this week as we kind of bounce between those kind of zones, and the index has some trouble figuring out which direction it really wants to move. That's kind of what I'm seeing there. So let's go out to the Dow. Oh, actually, sorry, I want to go to the continuous first for the big picture. We can go to the monthly chart, big picture. And you can see we're getting that buying pressure just like we had on the ES. I'm not sure if the monthly 13-month average, we're just above it now. And I was wondering if we were going to close below, because again, closing below that monthly average usually leads to future lower prices, and we just aren't doing that right now. We're staying above. So going down to the weekly chart, you can see that prices have been making some lower highs. That's a downtrend, and still seeing weakness overall. And we are back up into this rally base drop kind of supply zone that we created on the weekly chart. And we should start to fall pretty soon. We are still seeing nothing but bullish pressure here, though. The Dow's been holding up better than other indexes. However, it's just not as bullish as I'd like it to see for it to continue to go higher. So we may start to get dragged down by the other indexes. If you take a look, we made a high back in January 3rd. It started dropping. We recently put in a bottom. It looks like around the 22nd of February here. If you go out to the continuous contracts and compare all of them, which I actually changed my chart here, so I got to put it back. It'll take me a moment. And let's see, we got, yep, there they are, ES, NET, NQYM, RTY. We're on the daily chart. So we go to the beginning of the year. Now we'll go to weekly chart, be easier to do that. There we are. And we're looking at, as I mentioned, January 3rd, beginning of the year. So year to date, right there, you can see that the ES is now the strongest. It was the Dow. As we were collapsing, you see how the Dow is the strongest index out of all four? It was simply being dragged down by the others, and then it tried to rally up. However, it wasn't able to be the leader anymore. It kind of gave that up and yielded to the ES. Although we can look at the March 7th bottoming out, or even the February bottoms, and just see, okay, who actually is the strongest. It looks like the Nasdaq's trying to emerge, but again, it was very, very weak when I saw it. Let's go to the daily, fine tune this a little more. So let's see, the bottom, whoops, wrong page. Bottom of the markets, looks like we had a bottom right here, the 14th. And it looks like the Nasdaq is trying to show some strength, and the Dow is just going a bit sideways. Either way, the big picture, when we were moving down, as I said, the Dow was the strongest, and it does look like the strongest right now. We're seeing nothing but bullish pressure there. So I'm going to go to the continuous, or from the continuous to the specific. And there we are. So clean this up, go down to the daily time frame, and just see what's going on here. So the Dow wants to go higher, but it is in an actual zone of supply. Now we're spending a lot of time there, which usually we break out to the upside, but notice we have not been able to get above 60 the whole time. So I think that with the other markets fall, this is just going to be dragged down with it. There's just no choice. And the fact is that we can't seem to get through that supply. So our first target down, looks like we got, oops, forgot to include this one. Drop, base, and rally, 33,163 is where we're heading if we start pulling to the downside. There may be some stops along the way during the week, but overall, it looks like we're going to be heading downwards here because we are in supply, can't get enough momentum to get above. So either sideways or slightly down this week to begin off, or to start this off. If we can break higher, we'll meet up with some additional supply. Let's see, that may not actually work. I'm not sure. It is a lot of selling pressure, though. Reason why is that not all my candles are closing inside this leg in. That's the problem. So it might not qualify. We've got a high of 36,050, and that's 0.74. So that is higher. So we might be able to go a little bit higher than that, but I wouldn't be surprised to slow down a little. I don't think that's an issue for this week. I think we're either sideways or down, though, this week anyway. So going down to the 4-hour time frame to kind of fine-tune price action a bit, I'll start off with a clean chart once again, put in a horizontal line to see what we might bump our heads up against here. And we do have a really strong zone right here. Rally, base, and drop. So 35,486 is going to be very difficult to get through that with all that selling pressure you can see. And above it, yeah, there might be another area here. Looks pretty good. So two zones sandwiched on top of each other, it's going to cause a lot of selling pressure if we try to go up. So that was about 35,486 to 35,780. Now, if we start to move down, Like I said, this is not the market you really want to short because it's not the weakest, it's the strongest. There is actually a little bit of demand almost immediately. You got rally base rally right there. So can't see it really going down too quickly. You'd be better off shorting the other markets, the Nasdaq especially, and maybe the ES. That's not great. I say that because it didn't really have any follow through. This was the better zone, which has already been tested twice. So I think we can get through that. Does look pretty weak if we go down. There's not really much here in the way of demand until that's already been tested. You have drop base rally right there. So another one just below that. Nope, already been used. So that's the problem. We've got all these areas that have already been used on the lower time frame. So, wow, let me put in a horizontal line here. This could get weak if things start to drop. And we're not going to find anything on this chart. I have to go back to continuous in order to find it. So I'm not going to bother with that right this moment. But that doesn't look too well to hold up. I mean, it held up on its own pretty well compared to the other markets. But on this move down, there may be a lot of movement very quickly to the downside. Again, I'd still rather trade the stronger market in the direction we're traveling, where the Dow has been strong to the upside. The Nasdaq and the ES are likely to be the leaders as we go down, maybe even the Russell. So let's see, we had a little bit of a touch. I'm on the 1 hour chart now looking at this. Yeah, it's a zone. Qualifies rally, base rally, has all the pieces, except for, did kind of break this a little high. And then below that, let's see what else we have if we start to fall. Nothing great here. This has already been tested, so it would probably, nope, that doesn't qualify. Yikes. There's nothing until down here. First little area, and then another one just below it. Right there. So we got 32,919, 32,813, and then just below that, the 32,758 to 578. So if we fall down, there could be a big move between this 34,401 all the way down to 32,919. So just keep that in mind as you're looking at the markets this week. And finally, we go to the Russell. And again, I'll clean this up. On the continuous contract, I'm going to go out to the monthly. The Russells usually drop before everything else does when it comes to the big crashes. And you can see on the monthly chart, this is still pretty weak. We did have bottom tails on all the candles, but we haven't really made a new high. We made lower high. So that's a pretty telling sign right there. Looking at the weekly moving average, you can see a 13-week, we've already closed below that. So this is kind of like the canary in the coal mine. When you look at the Russell, as that bird chirps in the background, I don't know if you hear that. Anyway, the canary in the coal mine is chirping because the Russell closed down first. It happened in 2000 and also in 2008 during the crashes. Usually Russell breaks down first. So this is giving us some weakness signs right now. Going to the weekly chart, I'm going to get rid of the moving average actually. Forgot to do that. You can see that we've got, well, not really a zone here unless rally, base, 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 drop. I suppose that's it. We haven't reached that supply. It doesn't look like we're going to. You see the red candle we have from last week. We didn't have a red candle on any of the other markets, did we? They were all bullish. This looks very, very weak. So dropping down to the daily, we'll switch over to the RTYM 2022, which is the specific contract to get our details here. Really, we're stuck in a range, and we just hit the top of the range. This is the range right here for the most part. When you get a false breakout, you usually snap to the opposite side. So here we are rubbing up against the top and losing momentum. As you can see, the RSI is my momentum indicator I'm choosing to use. It's moving down, and that shows that price is likely to fall down as well. The bottom of the range does have an area of demand here on the daily, and that would be our first downside target other than hitting the bottom of the range. That's 1967.3 to 1911.8. And we have an overhead supply zone right here that is putting pressure on us before we even get to it because, again, we're just really stuck in the range. So if we start pulling back, let's see what we got here on the 4 hour. There's not much. The same kind of chart pattern that we saw pretty much everywhere else. It's the high here. 2038.1, the close 2038.2, that closed above. So we have rally, base, and rally right there. 2034.9 is your first target until we get down to, and you saw on the daily, this was a zone. We could divide it into smaller zones here on this 4-hour chart that kind of overlap, actually. Rally, base, rally, base, rally. But those are your targets on the way down. And we got selling pressure that we're into right now. Not the most organized or best looking supply, but it does look like rally base drop. It did break prior lows too on that leg down. So we're holding down at that area and can't seem to get above 60. So that's a lot of weakness that we're getting in price. Let's take a look a little closer here, 60-minute. And on the hourly chart, if we do move higher, there is overhead supply that we might run into. This would be if we do get some bullish pressure starting off the week, I still don't see us breaking out of the overall range. So we might go a little deeper to 2085.2, 2088.4. If we do break out, I would think it's a false break and watch for a snap back in the opposite direction. And if we fall back down, this has already been tested as demand. You can see we bounce off that on Friday. It's a really wide zone because of what we call a high wave candle. That's this one. With the high wave candle, you have a small body and really long legs on either side. That's all it is. It's usually an indecision or reflection point for price. It's been tested, so we might be able to get through that pretty easily. And then you run into those areas I saw on the 4-hour, but actually this other one was tested already too at 2039. So I think it's right underneath. Yeah, it kind of overlaps. It's been tested too many times. I wouldn't want to use it. So you want to look for fresh, and that's all the way back down here. And these are still pretty much the same, although this one doesn't quite qualify anymore, so it would be the bottom of that range. Right there. So you got 1968 and then 1933 if we break down from the first low of 2057. But that's a pretty big zone to get through first. So unfortunately, because there's a lot of buying pressure there and we're near the top of the range, we might just end up getting tight and go sideways for a bit this week. So keep an eye out for that. If we do break down, again, look for momentum. We need to be below 40 to really get through demand zones. So if you don't see RSI below 40, like right here, you see we hit the demand, we're above 40, that's where you bounce. If you're below 40, you'll usually continue to push through. So if we go back into this demand zone and dip below 40, then it's probably going to drop through all the way down to the 1968 level. So that would probably take you for a nice short down on a breakout. Often I don't trade the breakouts. I'll wait for the price to break out, then retest that area kind of as a little bit of a resistance before it drops. So that's what I'm going to be looking at for this week. And if you got any questions, let me know. I appreciate you being here for my analysis. Also, keep your eyes open. I got a new project launching next week, the Wendell effect, and we'll see what that's all about coming up next week. So until next time, trade safe, trade well. And if you'd like the video, please hit like and subscribe, and I'll talk to you again soon.